Welcome to the Private Investors Podcast, the podcast where keen stock pickers Mark Atkinson and Maynard Payton talk about managing their share portfolios. Mark began buying shares in 1984, while I started in 1993. This time we cover Tristel and the company's hospital disinfectants and shareholder open day. Let's get started.
Hi, Maynard. Good to see you again.
Yeah, it was good to see you at the Tristel open day as well. Tristel have hosted 5 of these open days now, and I've been to all 5, and you always seem to choose the hottest day of the year to host it, but I thought it was a very informative and useful day.
Yeah, I still ticker TSTL, high-level disinfectant involved in infection prevention. Now, I've been a shareholder in Tristel since 2017, but I believe you were an investor a little bit earlier on the trajectory at 2013, and for you it's been a multi-bagger.
Yeah, so I bought in December 2013 at 42p. And so with the shares now at over £3, it's been a 7-bagger for me as well. Have I told you about that before, Mark?
Yes, you've told me several times. And if you think I'm envious, I am.
It's quite interesting how I found Tristel. It was December on a Friday, so not much stock market news. I was just reading the RNSs and saw the statement from Tristel, never heard of the company before. And this first half trading statement said sales are up 36%, all organic growth. And they talked about losses turning into profit, a significant profit, and also the full year profit ahead of expectations. So this statement read really well. So I did some more research, looked at the previous statements, and they talked of a proprietary product which was protected by patents. This product was a medical wipes disinfectant. So if you go into a hospital and if you're examined by an ultrasound probe or a nasendoscope or a tonometer is put on your eye, you've got to have those devices disinfected. So they've developed this wipe, which is just like a wet wipe, but with this special chemistry injected into it based on chlorine dioxide. So this, with a few special ingredients mixed in as well to make it really powerful. So it kills all these superbugs dead, all known germs dead. So MRSA, C. diff, COVID-19, kills everything. And so they talked of these wipes being a principal method of device decontamination in hospitals. So it sounded like a really good product with a bit of a niche, prominent product in hospital. And it was selling in not just in the UK, but all around the world, 27 countries when I was buying the shares 7 or 8 years ago. And they were talking about significant growth as well back then. So the product seemed really good, and the company's done really good since. So sales are up from 11 million to 30 million since I was buying the shares. Profits up from 1 to 2 to 7 million the other year, and net cash has gone from 1 to 9 million. So the company's done really well. And when I look back, I did some sums. I thought, I think it's trading at 12 times earning for a company that's grown at 36.
Yeah, it's a little bit more stretch now.
Yeah, but it looked really cheap back then. So I thought it looks a really good opportunity. But the market cap was just £16 million. So it was well off the radar. It was small, obscure. It had a few difficult years before I was buying. So profits had fallen, the dividend was cut, and people had given up on it. But if you look through the statement, the company was doing really well.
Yeah.
And at 12 times earnings, perhaps, there was a good opportunity there with a decent product, which seemed to have some sort of niche and significant growth opportunities.
Yeah. It was listed in 2005. And you only got in 2013. So you don't necessarily have to get there right at the get-go, do you? You can bide your time and still be on a winner.
Yeah, it had a few good years after the flotation. Then one of its older products had some difficulties. Customers basically stopped buying.
Right.
So it lost its way, but it already had developed these medical wipe disinfectants. So these were selling well, but the headline numbers all looked a bit shaky. But if you read the statement, you could see, oh, hold on, the sales are now growing now. These wipes are becoming a much larger part of the business, pushing the business higher. And the profit decline was turning around. The profits was back on track. And it was a good opportunity, in hindsight, good opportunity. But was I lucky just reading this RNS on a Friday in December? And I look back and you think, maybe with small cap companies today, where the shares have come down so much in the last year or so, maybe there are companies now where they're still trading okay, but the share price is, people have given up, and the valuation has come right down. And you think maybe there are multi-baggers available right now to buy for the
Yeah.
next 7 baggers. Even during these market conditions,
Yeah.
during the summer, shares are down. People have given up on a lot of small companies right now. If you've got the time and inclination and want to put in the effort to find these hidden gems, the next multi-baggers, all you got to do is just, I say all you got to do, but you've just got to read the RNSs and think, oh, maybe there's an opportunity. So
Yeah.
that's what I've learned from Tristel, was that maybe looking at companies you've never heard of just to see what's happening. And then if they tweak your interest from that statement, do a bit more research. And then, you could be on another multi-bagger.
Yeah. We got different styles, but it's one that we both hold. For me, it's a much smaller position, just over 1% of the portfolio. But I think you're in a bit of greater depth. When you took that position, did you go in relatively big or did you build it over time?
I started buying in December 2013 and stopped buying a few months later. So my average price is 46 and I paid as much as 49p. I've never bought any since.
As much as 49 or as little as 40?
As much as 49p. And so I've never bought any since. It's grown to be a significant position and I've had to trim it down because it became a large position. There was various developments where I thought maybe there's not going to be, the progress isn't going to be so great. But in retrospect, I should have kept all the shares. I've kept 25% of the shares I've bought, but I'm up 7 times. I started selling at 79p. So, which in hindsight, you think, why did you sell?
Yeah, but that's the thing about top slicing, that it's a compromise, isn't it? But either whether it goes, you should have sold a lot or you should not sold at all. You know,
yeah, I look back and why did I sell them? And now the shares are £3, having been as high as 6. I'm thinking, why didn't I sell at 6? So you're always thinking why you didn't sell or you did sell.
Yeah, I don't think it's a good thing to beat yourself up too much about things like that.
I'm happy with the performance of the company and the shares, so I'm quite pleased with how the company's done.
Now, they had a trading update last week. What did you think of that?
I thought that was satisfactory. I thought there's 2 points which stood out. The first one was the special dividend. That wasn't mentioned in the open day at all in the market. Nobody mentioned that at all, which just suggests some sort of confidence in the business. And also the line which said the company had high hopes of the US becoming a significant revenue and profit contributor within 5 years, which sounds quite bold given that they've only just submitted a document to the FDA to get approval for a product to sell in the States, which is going to take a year before they hear a verdict from the FDA. Already they're implying that they're going to get an approval and sell this disinfectant or sell a lot of this disinfectant in the States.
We've been holding on for the United States for a while. That's a real game changer. That will be hitting the mother load, that, wouldn't it, really? I think
it's a big market. Talking to the FD and the lady, Julia, who was in charge of the US project at Tristel in the open day, they were both pretty confident of getting approval and the product selling really well. Both of them said receiving questions from US hospitals by email or on a daily, weekly basis, strong expressions of interest. They expect the first year to be significant in the States. There's not going to be any lag. So when they get the approval, they're going to be selling these straight away. That's the impression they gave.
Yeah. It is very much an export-led business, isn't it? 65% of the sales come from other markets. So if it works in other countries, I can't see why it work in the United States.
Yeah, it should work. It should work in the US. It's just the regulation in the States are a lot tougher. And the project in the States has been ongoing for years. They first mentioned it in 2015. And they said, oh, okay, we'll get the product submitted to the FDA by 2016, and then we'll get approval and start selling it in 2017. So 6 years later, they've only just submitted the document to the FDA. So it's been a long, drawn-out process where management have totally underestimated the time and effort involved in getting a document actually to the FDA of suitable quality.
Yeah. There were a few questions from the floor about the expectations and timelines from the US, but they were very careful not to box themselves in with any promises that they can't keep up the road. Now, the compound annual growth rate is about 15%, and that's been calculated going forward. So anything from the US will be on top.
Yeah, it's pretty good from management because they give these 3-year guidance. For the next 3 years, sales to grow by 10 to 15% a year. And not many public companies give that sort of guidance. So you've got to give management some credit for that. So it shows some confidence. None of it's including the States. That comes on top. One number that was bandied around the marquee and the tour afterwards was this £30 million a year. So Nanosonics, which is an Australian company which makes a disinfectant machine as such, uses a different chemistry, but disinfect ultrasound devices. Tristel management and the staff all talked about them earning revenue of £30 million a year from their disinfectants in the States. And Nanosonics have said that they could sell twice as many machines in the States. So the figure actually could be one day £60 million or 70. So they were talking up the numbers in the States effectively. When Tristel at the moment, they sell 20 million of revenue overseas at the moment. It's not hard to work out that the States could be Tristel's largest market by far in a few years' time if this new product gets approved and sells really well. So it's a significant opportunity for the business, and all the talk with the staff was positive about the States, that the fact that they will get approval and it will sell really well, really quickly.
They're in more developed economies. But if you look at the way longer term, how the world's going, the expectations for your healthcare in emerging nations is a lot greater now.
Yeah.
But you just look at, in my time in investing, their economies, China and India, they just weren't really on the map, were they, 30 years ago? And as their GDP is going to be going up, their expectations for what they expect for the level of disinfectants and the cleanliness they get in their health systems are going to be a lot higher.
Yeah, you saw that map. So there's a big map of all the different countries where they are selling. And I talked to the chap who's in charge of the distributors, and he was talking to people in Indonesia, Vietnam, the Philippines, all interested now. I think the pandemic has done a lot for the business in terms of highlighting the importance of disinfection in hospitals.
Yeah. In the short term, it's actually affected the business because it was you've not had the same number of procedures going through. So that's actually slowed things down a little bit, didn't it? Since they've been floated, there's only been 2 years in which the revenues dropped. And one of those was, I think, 2012, 2013, and then during the COVID year. Hopefully now we're going to be back on the same trajectory.
Yeah, that's what the management suggests. We slowly getting back to normal numbers of procedures and people revisiting hospitals and appointment backlogs being cleared. Yeah, that might be a slow process, but the general theme is that disinfection in hospitals has risen up the agenda. I don't think it's going to revert back to how it was pre-pandemic.
It was an interesting statistic in the UK GDP figures for May, which rose 0.5%, that part of that growth was down to people returning to see their GP. And that triggering some kind of normality of prescriptions being written and procedures and all the economical benefits that creates.
Yeah, that's interesting. Yeah, for Tristel shareholders, hopefully get back some normality in terms of procedure numbers. And there must be a backlog of examinations to be done and people revisiting hospitals as they used to do pre-pandemic.
Yeah, because the business does split into two. They've got the medical instruments and also a cash side, what they CACHE, surface disinfection. That's a much smaller part of the business.
It's using the same chemistry, but the surface side is using the chemistry to clean mattresses in hospital, bedside tables, floors. And it's always been the poor relation to the medical devices. I spoke to the staff members there because it was all the products for the surface disinfection were on display. One or two staff members there, talked to them, and they were quite optimistic now that the surface division was going to start coming good. It had struggled to get momentum, but I think one of the problems was they tried to sell the surface products at a premium price, and the hospitals wouldn't buy. So you can have the greatest disinfection quality chemistry, but you've got to have a certain price because otherwise the hospitals just use a cheaper, less effective alternative. So they brought the price right down. With their surface products now, it's equivalent to the cheapest wipe there is on the market, effectively. So effectively now there's no real excuse for surfaces products not to sell really well. So they've rejigged the pricing, rejigged some of the products. It's all quite simple, I think, and it should sell well, but we'll see. This division hasn't really performed that well, but they talk about the NHS going green. So one of the advantages of their surface products is that it doesn't use plastic wipes. It's all recyclable products. You can use a paper wipe, it's just biodegrades. The talk was the NHS eventually shifting towards their products because they don't want to be spending money on billions and billions of plastic wipes which go into a landfill. That's the sort of theme that Tristel are trying to market.
The business looks a lot more streamlined to me in that they've got rid of the non-core products, haven't they? They've ripped the plaster off and they've got rid of those, haven't they? And when you look at the gross margins that they were making on the non-core, they were at 53% compared to 83%. I mean, most companies would be head over heels with 53%, but Tristel have actually said they're going to let this side of their business go.
Yeah, they did that at the start of this year. I think they hinted about get rid of all these non-core products. And in the half-year results earlier this year, they announced they just shut them all down, closed it, which was a bit sad because I thought they're still making a profit. No other company wanted to buy them effectively. They were still making a profit and they just stopped selling them. And there was a little bit of a niggle in the accounts where some of the products they've got rid of, they were accounted for in the old surface division. So it looked like the surface division was making a bit of money, and then they announced this restructure, and then all of a sudden got rid of products we thought were surface products. So effectively the surface division wasn't making as much money as we were led to believe earlier. So that was a little bit frustrating. But I think the general decision to get rid of all these products, because there are thousands of these small revenue products which just weren't selling that much, making some money, but just taking up a lot of time and effort. Just get rid of them. And I think if the States come good or the overseas sales come good, I don't think it's going to make much of a difference whether they could have got some money for these products or not.
In the previous year's annual report, they've written down their investment in mobile ADT, which is an investment in an Israeli business.
Yeah, so they wrote down some of the restructuring assets as well, the non-core assets they've written down there. Mobile ODT, that they spent £800,000 on that. This is an Israeli company developing a mobile colposcope. Sounds a great idea. It was basically a device you put on your smartphone with some fancy AI software, which was used to detect cervical cancer. It could be used remotely, so you didn't have to go to hospital. So it could be used out where the patient lived or out in remote communities. He always talked about having it used in rural America. The idea of this device sounded pretty good, and they were going to make the disinfectants for this device, but clearly it didn't sell, and they invested money and effectively decided not to invest anymore and written it down to zero. So it's one of these projects where sounded good, just didn't work out. Some of the directors at the time, the non-execs, they invested as well, sort of big six-figure sums alongside Tristel. This goes to show that not every great idea on paper actually comes good in the end.
Yeah, I think it's very much we're at a reset now, aren't we? We've got a solid foundation before, but it's a reset. They cleared the decks and
they thought, let's concentrate on what we know that works, which is the wipes and perhaps the surface disinfectants. So they've had other projects as well on the go, which there's another product a few years ago called Rinse Assure, which cleans the water in hospitals, which they mentioned in a presentation, then never mentioned it since. So these projects, perhaps they come and go, but the wipes still sell, and the surface disinfections products sound pretty encouraging.
All sales are exclusively to hospitals, aren't they? That is their market.
Yeah, it's hospitals. They've got rid of everything which is sold to some of the vets and clean rooms and other stuff. So they've all disappeared now. So it's purely now hospitals, and they're sticking to what actually works, what actually sells, and concentrating perhaps on the States, I think.
Yeah. Just going back to the open day, I think we got good value from that. They're quite a rare thing. You can attend an AGM, and I generally find a lot of these are quite dry, formal events. And I went to one just like Ampari AGM the prior month, and there's just myself and one other shareholder that attended. These tend to attract people to turn up and participate and exchange ideas. And, it was like for 3 hours, and it passed very quickly, I thought, anyway.
Yeah, it did. To Tristel's credit, they've hosted a number of these, 5 of these, and they announce it in the RNS. They're not secret events. Anyone can turn up. You sit in the marquee and you listen to a presentation, and you can ask questions to management. Then when we were there at the open day, Mark, you went round the production facilities. So what did you think about those?
Yeah, it was quite interesting that actually what produces this thing, it looks like something that you can fit in your living room, the actual thing that mixes the chlorine dioxide. But when we went through to the finishing department, the new tank product where they're making these capsules, one of these is being manufactured every 60 seconds. So it looked a little bit PC plod. But obviously this is just a first model. And I would imagine as demand increases, the machines will have to become bigger and faster.
Yeah, it's good. And it's generally good to chat to the staff, and all credit to Tristel's management. They hosted these events. And I said to the management when I was leaving that it's, for some companies, it's enough to just get them on a webinar and you host these physical open days where anyone can just turn up effectively. Yeah, it's great.
Yeah, it's good to meet other shareholders as well, isn't it? We're there to primarily to learn about that business, but it's good to meet other shareholders, and also some fund managers were there as well. So it's well supported, isn't it?
Yeah, so Eric Burns from Buffettology Fund, he was there. So I spoke to him. He was in shorts like me. So
Right.
You were there with Rosemary Banyard.
Yeah, I met Rosemary Banyard. She runs the Downing Unique Fund. Met her a couple of times, and she's always interesting to talk to, and a nice lady. Yeah, good to. They obviously see some value in going to these events themselves.
Yeah, it's good to see that the fund managers are there as well. And presumably they know a little bit more than most private investors. So you'd like to think they do.
It's a very profitable business. I felt that, in a way, perversely, it covers a couple of sins. I raised a question about debtor days, and there's an amount of 112,000 beyond 120 days beyond due, which I raised a question about, and they seem very, I won't say lax, but relaxed about it, because they know they always get the money in the end. And I suppose that the kind of margins that they're working on, it's something that can tolerate. In businesses that I've been involved in, they've always been pretty hot on getting the money because the margins have been wafer thin.
I think cash collection here is pretty good. So I've never had an issue really with, or at least I'd never really noticed Tristel struggling to get the money in from its customers. So I think some of the longer overdue payments are from some of the small distributors who are maybe just starting out, I think. So, but the money comes in, paying out a special dividend. They paid one or two special dividends a few years ago and restarting paying out another special dividend. And they've still got £8 or £9 million of cash now. So it's a high margin business. The money comes in. They buy commodity ingredients for this chemistry, mix them up in a special way. I spoke to the inventor of the chemistry, Bruce Green. He was there. He's an interesting chap to speak to. And one of the worries I have of the business is the patents. So some of the patents of the wipe system, they expire in the next 2 years. And I'm thinking, okay, is that going to open the door for generic competition? So I spoke to Bruce Green, and he says, don't be concerned about that. And he explained that the chemistry involves various secret special ingredients, which clearly he was not going to tell me about. But also, not only are they secret, but the manufacturing process involved is secret as well. So if you're trying to copy these wipes, you've got to find out the right manufacturing process as well. And he said that various large companies have all had a go at trying to replicate what Tristel do with the chemistry and not succeeded. And he was quite confident that even if they did concede, even if they did replicate the chemistry, that they would still be 20 years behind Tristel.
Yeah, they've got a 20-year start, haven't they?
Yeah, and is it worth the effort? If you've got the resources to try and duplicate what Tristel have done, you're probably a pretty big company. And then, okay, you've then devised a copycat wipe, but will it generate the returns suitable for that initial research? Probably not. Is it going to make that bigger company any more profitable? Maybe not. So I think a lot of potential competitors have looked at the market and thought Tristel have got a little niche in a small part of the medical disinfection industry, and it's not really worth our time and effort to try and compete against it.
Yeah. Just moving on to the directors, Paul Swinney, the CEO, and Liz Dixon, the CFO. They were as polished as ever. They work very well together, don't they?
They are.
Yeah.
They're married.
Yeah, I believe so. Is that a consideration or a concern for you? There's 3 executive directors, and 2 of them are married. And in Liz's case, she's the CFO, she's the UK managing director, and she's the company secretary. And the only thoughts are, if they decide at some point we want to do something else with the rest of our life.
Yeah, if they're married, does it mean they're too cozy? I can't imagine Paul firing his wife from the CFO role.
Yeah.
Is it all a bit too cozy there? I don't know, to be honest. The issue I have with management over time was this US project where they've completely overpromised and undelivered on the United States. So that's the main frustration, I think, with me for management. On the marriage side, not ideal. They got married, I think it's the 2019 annual report. that revealed the marriage. You have to look deep through the corporate governance text. So I don't know, is what it is, and we'll see how things work
I
out.
think they could strike me as being very competent and passionate about the business. They do seem that they've got lots of energy. And I suppose it's not a familiar situation. I haven't come across it before, but this is where your wider board come into play, isn't it? And they do seem to have a strong non-executive team with a diverse skill range.
Yeah. The chairman, he was chief executive of a hospital group in Oxford. So he's got the inside knowledge of hospitals. You've got a non-exec with supplies some of the packaging. So he's a supplier. He's got the supplier point of view. And an intellectual property lawyer as well. And you've also got a senior marketing executive from Johnson & Johnson from the UK. So yeah, all relevant skills to help this business, I think. It's too many small companies have non-execs with full of accountants or lawyers or someone from the city who are adding no real input into the underlying business. It's good to see that there's a relevant experience here with the non-execs. Paul Swinney's been the chief exec. He's been at Tristel, I think, for 30 years. So I can't see him leaving just to get another job somewhere else. So he's going to be there. I think the end game is it's going to be bought at some point. It would just make a good fit for a larger healthcare business or some other business. And then this larger business could manage it just as well, I think, without the current management team, or at least with this chief exec and the finance director. I think that's the end game. Yeah. Or perhaps if this American project, which has dragged on for years, if they do not get approval, then there might be questions asked about management then. But let's hope it just gets approved and the sales do take off in the States.
Yeah. Well, before I ask you, I'll show my hand. I'll put my cards on the table. And I would say it's a hold for me, this business. I think it's an absolutely cracking business. I really do. It's a fantastic business, but it's reflected in the price. I feel like it's fully valued. And it's been interesting when you mentioned about takeovers that Paul and Liz have been questioned about the potential. Haven't you been snapped up? And Paul's turned around and said, well, look at the valuation. Almost who would buy it at this price? So that's, I'm thinking, if nobody else is likely to invest in it, why should I?
That was mentioned in the marquee. There's always questions about takeovers. I'm not sure if the protocol of shareholders asking management about whether the company should be bought. Or Paul Swinney's not been afraid of saying we could be part of a larger business. I mean, in the marquee, someone asked about selling these disinfectants to consumers. Yeah, good question. And he said, we're focused on hospitals. That's not our skill set, selling millions of these wipes to consumers. That's the job for Reckitt Benckiser. Given their strong hint that, if we go down that route, we could be snapped up by Reckitt. The market cap of this business is 160 million, which is, you'd like to think, perhaps small change for a large multinational who wants to get into hospital disinfectants or some other disinfection industry. He's not afraid of suggesting or implying that the business could be bought at some point. Well, maybe that's wishful thinking on my part, but that's the impression I've got. And he's quite happy to answer questions on the company being bought, which is unusual for company chief exec.
Yeah, that's the paradox for me, where I'm generally look at what else I've got in the portfolio to add to, and I'm probably going to be looking to invest in businesses that aren't quite as good, but are at a better value.
Yeah, at the moment, current market conditions, you look through your portfolio and think a lot more shares which are less expensive than Tristel, so more upside. But if the States come off, then who knows? I've done some rough projections based on the sales guidance and margin guidance over the next 3 years. And I think it could be still valued at least 25, 30 times earnings over the next few years. So it's pretty elevated rating. And as I said earlier on, I've not bought any since 2014 at 49p. I don't think I'll be buying any more just yet. I think if anything, I'll be more of a seller than a buyer. It depends how the States go, and also other opportunities in the market, because a lot of my shares now have fallen significantly in the last year or so. I'll be trying to look for the next Tristel, looking through the RNSs today, looking at small companies which the shares are very depressed in some areas. Small cap shares have fallen significantly. Where are the opportunities? I would not be looking at Tristel now to buy. I think I'd be looking at trying to find other multi-bagger opportunities elsewhere. But I'm happy to hold on, because I've held on for 8 years waiting for this American approval, and I don't want to sell out right now because they may get it next year and then the sales bonanza happens and I want to be on be still holding for that potential bonanza.
So if we're both prepared to hold, then it'd be a case of see you there again next year.
Yes, back in the marquee in the car park. Hopefully it won't be as hot
No.
next year as well. When I got in the car to drive home, the dashboard said 39 degrees, and that was
Yeah.
too hot, Mark. Just
Yeah.
too hot for me. So hopefully next year in the marquee, it'll be a lot cooler.
Yeah. See you then.
Bye-bye. Well, that's it for this time. Thanks for listening to the Private Investors Podcast. If you enjoyed the episode, please let us know by liking, subscribing, or even leaving a review. Until next time, thank you and goodbye.
Do you participate in the canapes and quails eggs by any chance?
The buffet. Oh, no, I was too busy walking around. What did you score the buffet? Were you at the buffet?
Oh, it was a strong 8 out of 10, certainly.
Oh,
Yeah.
fantastic.
Yeah.
Fantastic.